Hey everyone, Snowflake stock has been one that many investors have kept an eye out on for 2023. Unfortunately, the stock price hasn't remained low enough for long enough for me to recommend Snowflake stock as a buy. I've had it as a hold all year long. The stock price rose from around $140 per share in January all the way up to $199 per share as of this recording. But where could Snowflake stock price go in 2024? That's the question I'm going to answer in this video, looking at several estimates and assumptions to make my Snowflake stock price prediction for 2024. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, so one of the first estimates we're going to include in our valuation prediction is the estimate for Snowflake's earnings per share in 2024 and 2025. According to a consensus of analysts that follow Snowflake stock, they think that Snowflake's earnings per share will come in at $1.13 in its fiscal year 2025. That would be up from 80 cents in its fiscal year 2024. Now, that estimate is a little higher than the $1.04 analysts thought that Snowflake could bring in 2024. So that's been increasing lately as analysts are getting more bullish on Snowflake stock and its earnings power. One of the other assumptions we're going to use for Snowflake's stock price prediction is its forward price to earnings ratio. It's currently at a forward PE of 175.51. That's an expensive valuation. And despite how excellent Snowflake's business is, this valuation is the reason that I've been hesitant with Snowflake stock all throughout 2023 and now going into 2024. In 2023, I didn't recommend Snowflake stock as a buy because the valuation was expensive almost all year long. Only briefly did we get a chance to get Snowflake stock at an attractive valuation, and that opportunity was quickly taken away as the stock price bounced back right back up to higher levels. So now that we have some of the estimates from Snowflake, including its earnings per share forecast and the earnings per share estimates, let me change this on the fly here. This should say earnings per share estimate for 2025. Thank you for bearing with me on that. So if we assume that Snowflake will deliver earnings per share of $1.13 in fiscal year 2025, and we assume the forward price to earnings ratio stays at 175, then the estimated stock price in 2024 at the end of 2024 could be $198 per share. Now, that would be a relative disappointment because the stock price is currently at $199 per share. So it would be a decrease of $1. I mean, that wouldn't be a disaster, but Snowflake stock investors would not be happy with that return. But what if investors become more optimistic about Snowflake stock and the forward PE rises to 200? Then the stock price could increase to 226. But what about the lesser cases where the forward PE falls to 150? Then the stock price could be 170. Or if the forward PE falls to 100, the stock price could be 113. So according to these estimates, 3 out of the 4 suggest that Snowflake stock will be lower in 2024 than it was in 2023. Let me show you some of the highlights, some of the factors that could change the valuation. So one of the more important factors for Snowflake stock is RPO, remaining performance obligations. And you can see over the last 2 quarters that has risen from 3.4 billion up to 3.699 billion. These are contracts that Snowflake has signed, and they will turn into revenue as Snowflake performs these services that the contracts were signed for. If this number rises significantly faster, that will boost Snowflake's valuation because investors know that this will turn into revenue, and this will be revenue coming due over the next 4, 8, and 12 quarters. This is something to keep an eye out for each and every quarter, and something that I update every quarter when I provide my Snowflake earnings review. Additionally, the net revenue retention rate is a key metric for Snowflake and Snowflake stock. You'll notice here that the net revenue retention rate, after rising to 178%, has fallen for 1, 2, 3, 4, 5, 6, 7 quarters in a row, down from 178% to 135%. Now, what this measures is how much an existing customer spends with you in the following year. And so a number over 100% means that existing customers spend more with you on the second year than they did in the first year. It demonstrates that you're providing good value, because if clients are increasing their spending with you, that demonstrates that they're getting good value. Otherwise, why would they increase their spending with you if they're not getting good value, if they're not getting good return on investment? And so as this number is falling, it's showing that Snowflake clients are decreasing their spending with Snowflake. I shouldn't say decreasing. I should say they're decreasing the rate of increase. So they're still increasing year over year, but that rate at which they were increasing is falling. The second derivative is falling here. And that's concerning. So if this metric was to turn around, if it went from, instead of falling for 7 straight quarters, if it stops falling and starts rising, then investors, I suspect, would be willing to pay a higher valuation for Snowflake stock, and the PE ratio could increase even more. So those are some of the factors that I think could influence Snowflake stock and what investors are willing to pay for Snowflake stock. But you already see Snowflake stock is already expensive. And so it's difficult when you're trading at such an expensive valuation to find further increases, because it's already so expensive. Investors are already bullish on Snowflake stock. So where can it grow from there? In terms of expanding the multiple, I think there's little room for multiple expansion. But where Snowflake could increase the stock price is by delivering better than expected earnings per share. Look what would happen if earnings per share was to come in, instead of $1.13, what if I was to say earnings per share would come in at $1.46? Now that would boost up the stock price significantly, up to $256 in the base case. So I think there's more of an opportunity for Snowflake to increase the stock price in 2024 from an increase, or a better than expected increase, in earnings per share versus an increase in the forward price to earnings multiple, because it's already so expensive on a forward PE multiple. Now, the company has excellent prospects, to be sure, right? It's the best in class data solution, and these large language models, the foundation is data. And so they're in an excellent position to benefit from several tailwinds in the market. And so that's why it's already trading at an expensive valuation. But a lot of that excellent prospect, a lot of that excellent expectation is already priced into the stock, according to my opinion, and according to these valuations. So if I was to give you my best guess of where I think Snowflake stock could be in 2024, I would say somewhere in the range of $175 per share to $250 per share. Now, I'm giving an especially wide estimate for this stock because there's so many things that could change the valuation, because the forward PE multiple is so high that makes it even more volatile, and I have to give an even wider range because of the added uncertainty. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.